It is time for Money Tuesday. As we head into the new year, many of you may be reevaluating your financial goals. Well, you'll need a financial market game plan for that. Marshall Clay with the Welsh Group joins us now to help you with that. Good to have you with us this morning.
Hey, good to be here.
Yeah, so it really is important to have a game plan. Part of that is almost, a mental part of this. So, what you go into it in terms of your thinking, right?
You're exactly right. I think the key to this year is expectation management. I think you and I were talking off air that we've had two straight 20-plus year returns in the S&P 500, which is, really unusual. There's only been two other times that's happened really in the last, I think, 60 or 70 years. So these are unusual events. And it doesn't mean that 2025 necessarily is going to be a bad year, but I think our viewers need to sort of, have their expectations that this is probably going to be an average to below average year, which still could be pretty good. I mean, we're talking 9 to 10% rate of returns on the equity market. With some risk there. So that's why I'm telling folks to have realistic expectations and then review their asset allocation. So if you're, a retiree, for example, and you started 2024 and you had around a 60% average allocation to stocks, you're probably at 63, 64, 65% equities. So you want to get back to that target allocation just to manage your risk, take some chips off the table, make sure that if we have some volatility early on in 2025, that you're not giving all those gains back.
Yeah, and if you get into, for those of you who have 401ks there, you can get in there, and there's usually a function to do that, to reallocate where you want the money to go. And what about the charitable giving, though, this time of year and into next year as well?
Yeah, so I would say, the key with the 401ks is that there's no tax consequences to rebalancing within those qualified accounts, as 401ks, IRAs, but you mentioned the tax consequence. And I would say if you have these after-tax brokerage accounts, don't be afraid of taxes, particularly early on in the year. If you realize some gains in January, you have until the April of the following year to sort of figure out how you're going to navigate that. But if you're fearful of this, you've had a great run in the stock market, you may want to look to give low basis stock, stock that's appreciated in value that's in these after-tax accounts. Go ahead and facilitate your charitable giving in January. There's no rule that says that you have to do it in November, December. I know that a lot of people do that because we're in the holiday season and people are feeling a lot more charitable, but you can do it in January and February, and it helps you manage your risk. And then certainly if you're 70 and a half and above, there's some additional options as it pertains to giving from your IRAs or 401ks and things like that. So,
all right, let's say we're talking to somebody out there, they've never invested before. You were saying that, it's not going to be necessarily a bad year, but it may be down a little bit. Is that a chance for somebody out there to make a minimal investment, maybe $500, into something like a mutual fund?
Yeah, absolutely. I think if you're young, I think there's never a bad time to start, right? Okay. Because time is on your side. If you're 25, 30 years old, I wouldn't worry so much about short-term volatility over a 12 to 18-month period of time. I mean, you could put your money in an 80% allocation of stocks, 20% bonds, fixed income, and you'll be fine. I mean, you'll experience some volatility, but you may make money on your bonds, maybe lose a little bit of money on your equities, but keep dollar cost averaging. The important thing is to develop a habit of saving, accumulating really high quality assets.
And then depositing something every month, and by the time you get to retirement age, you could be a millionaire.
That's right?
Hopefully. Am I right or right?
Hey, that's the game plan.
That's the game plan. All right, that is Marshall Clay. Happy New Year to you.
Yeah, Happy New Year.
We'll be back.